Hello and welcome to Explain the Charts. Today we're diving deep into Tesla's stock, symbol Tesla, examining recent news and correlating it with price action on various charts. First, let's address the elephant in the room. Recent news reports suggest a decline in Tesla's sales in China, coupled with a price increase on the Model X in the US. This creates a mixed market sentiment, leaving many to question whether this is a buy or sell opportunity. However, let's now turn to the charts to see what they tell us. We begin our analysis with the one-day chart to get a broader perspective of the price action. Here on the daily chart, we can identify several key support and resistance levels over the past few months. Notice a significant drop in October, likely correlated with the reported slowdown in China sales. Following the dip, we can see a period of price consolidation, leading to another push higher. However, the recent price action has shown signs of weakness, which could signal a further decline. Let's take a closer look at the one-hour chart to understand the recent short-term price movement. The one-hour chart presents a more granular view, revealing short-term trends not immediately apparent on the daily chart. Observe how support and resistance levels play out over the course of a single day. We can clearly observe the recent pullback in the stock price. Moreover, volume analysis can help you better understand the strength of these movements. Now, let's narrow down and examine the 15-minute chart for a finer insight. The 15-minute chart offers insights into the volatility and the intensity of the price action within a given hour. This is especially useful for identifying potential entry and exit points for short-term traders. Support and resistance levels are more closely spaced here, indicating quicker price fluctuations. The data shows a strong correlation between news and the short-term price action. Traders could look for patterns and signals to determine the optimal time to act based on the 15-minute analysis. Moving back to the one-hour chart, we can see these 15-minute shifts better in a larger picture. Zooming back to the one-hour chart, we can connect these shorter-term fluctuations with the bigger picture of the daily chart. Remember the crucial support and resistance levels from the daily chart. These levels, combined with the short-term volatility, will help you determine the short and long-term trading strategy. Let's look at a particular range from the daily chart that gives some insight into the recent bearish activity. Here, we're looking at the daily chart from October 16th to 20th, 2024, a period of significant price decline for Tesla. This decline could be linked to the negative news from China and the Model X price hike in the US. Notice how support levels failed and the price continued lower. This suggests that the market sentiment is currently bearish. In summary, the current market situation is uncertain, with the negative news and the recent downward trends suggesting a bearish bias in the short term. Key support levels to watch on the daily chart are around 200, 215, and 230. Resistance levels are around 250, 260, and 270. On the hourly chart, look for immediate support near 350 and immediate resistance near 375. The probability of Tesla breaking below 350 in the near term is relatively high, especially if the negative news continues to weigh on the stock. However, the stock can rebound if there's positive news on future production or new technological advancements. It is worth mentioning that there's potential for a strong bounce off the identified support levels. However, any bounce should be seen as a temporary relief unless the overall market sentiment improves and more positive news comes out. In the long term, significant bullish moves require substantial positive changes in market conditions. Keep a close eye on volume. High volume during price drops confirms bearish momentum, while high volume during a price rise indicates bullish strength. Always remember, it's crucial to maintain risk management techniques. This includes setting stop-loss orders and diversifying your investments.